Hey everyone, it's Mike Faltos from Orderflows.com and welcome to my Orderflows market analysis for Wednesday, January 17, 2018. Now next week, I believe on Thursday the 25th, I will be doing a presentation with NinjaTrader talking about order flow. Now I know some of you guys may not be aware of it yet, but NinjaTrader is actually going to be releasing an order flow quote suite unquote. I haven't seen it yet. They had an announcement. They're going to probably trying to roll it out later this month, but with NinjaTrader, sometimes NinjaTrader has their own their own format of time where they say this date but it's actually 3 months 4 months later. But anyway, I'm curious to see what it looks like. Now again, people that are familiar with my order flows trader understand that it's not just a volume footprint chart. It also has 4 additional order flow tools to help you as a trader find price support, find price rejection in the order flow, find when traders are stuck. I don't like to use the word trap traders, but find when basically you have blow off moves either up or down, and the last buyer has bought or the last seller has bought, and a few other little little things that I don't want to get into right now. But before I jump in, a brief disclaimer. This presentation is for educational and informational purposes only, should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Well, the reason why I always say that disclaimer first, because I want people to realize that results are not typical. People will have different results. They do vary. It depends on you and what you're going to do as a trader. Your decision-making process, and not everybody is has the same thought process and can pick things up as easily as other people. I know some people order flows is just becomes like the perfect complement to how they're trading, and for others, order flow takes a while to learn. So I don't know where you fall into that, but hopefully you can pick up some little nuggets. I like to drop little gold nuggets, as I call them, in these presentations. So the tools I use in this presentation is the order flows trader, which is a volume footprint chart, but it's not just the plain volume footprint chart. Like even, for example, Sierra Charts has a volume footprint chart, but you got to know how to analyze it. You got to know what to look for. It's just as any chart, right? You could have any form of charting tool, but if you don't know what to look for in the chart, what's the point of looking at it? Just like with the dome, right? Everyone thinks, oh, I'm gonna get a dome. I'm gonna get this dome or that dome, the depth of market tool, and I'm gonna be successful. But the problem is they don't know what to look for in the market. They just think, oh, I'm just gonna sit in front of the dome and stare at it, and it's gonna come to me. It may not. Chances are it's not. It's, again, I hate to talk about psychology, but it sort of comes down to the right brain, left brain, where some people are able to visualize things and understand it from a picture much better than analyzing numbers or text. And the other tools I'm going to talk about in this presentation is the volatile SNR levels, which is support and resistance levels based on order flow. Now, the software runs on NinjaTrader, runs on NinjaTrader 7 and NinjaTrader 8. People that have been watching my videos know that for the last couple of years, I've been a big proponent of NinjaTrader 7, especially when this past year when NinjaTrader 8 has been out. But I've made the switch. I've cut the cord, and I don't really run NT7 on. I use NT7 for testing things, but the dominant one that I use now is NT8, and the charts I use in this presentation are NT8 charts. So that said, let's take a look. I'll talk about E-minis first this morning, and what I wanted to talk about is this buying imbalance here. So I've tried to make it bigger so you can see the chart easier. And around 11:23, you had this stacked buying imbalance here. Okay, so this market had been trading, back and forth since I don't know, call it 10:30. Okay, we had basically been trading between 27.91, 27.94. Then here at 11:23, we start breaking out of this range. Just sort of back it up here. Look at this. Okay, sort of been in this range, between, you can draw the lines here to make it a little easier to see. Where am I here? Which one? No, horizontal line. Between this this high area and this low area, I'll call it here, from, this is 1020 down to 1030, back up there, back down here. I'm gonna try and do it. Yeah, that's F6, but sometimes I press the wrong button because I think I'm looking at it and I press the wrong button. But anyways, it's these two. So we're trading here back and forth. And then you start breaking out here. Boom, you come back, you come out, come back in. Boom, look at this. Trading above it. Close above it in this bar. Let's open this up so you can read the footprint. Close above. You're not coming back in. Like here, you closed above, put the next bar right back in. Here, you close above. This bar is going to be telling, what are we going to do? Are we going to close above this area that we had been trading sideways for the last hour? Or are we going to come back in? And what do you get? You get this nice stacked buying imbalance, 4 levels deep, 1, 2, 3, 4. So you got aggressive buyers. There's very little counter selling here. You got 59, 20, 15. Then it starts going some strong two-way trade here. You can see 2,000, 5,000, 2,000, 2,000, 4,000, 4,000. It's finding a new value area, value area rather. It's finding a new area above this recent zone congestion area. I don't want to use the term zone, congestion that you had just been trading. And so now you've got supportive buying coming in. So here you got the aggressive buying right as you're breaking out of this congestion area. Stacked imbalance is the giveaway. Then you come in here and you've got very, very strong two-way action, both on the bid side and on the offer side. Okay, so who's going to win? Now the clue is this stacked imbalance. What do? We trade back in here. We're still above this point of control, right? This point of control here, as I've often said many times, when you're making a move up, watch your point of controls. Point of controls are going to be your resistance level. So here you got side-by-side point of controls. Then next bar up, we're above the point of control. Next bar up, above that point of control. Next bar up, we're above that point of control. Then we just sort of go sideways here. Then you get stacked selling imbalance. That's not a good sign. Okay, well, it's not the end of the world. Oh, we got a stacked selling imbalance. Oh, let's, mortgage the house and get short. No, you wait. If you got short here, say you got short off the stacked selling imbalance. Say you said, well, we just had this nice little run up. Now we got stacked selling imbalance. I got to get short. Okay, but if you got short here, you got to cover it here. What do you got? You got a stacked buying imbalance. Again, I'm not saying you got to buy and sell every single stack buying imbalance or stack selling imbalance. Take things in context of the market. It's a little easier to take this one because you've just been in a congestion area and you're breaking out of that. Now you're sort of it's not the first time you hit the high, then you got the stack selling imbalance. You got a stack selling imbalance as you're going sideways, and then what happens? It comes right back immediately the next minute with a stack buying imbalance, and then another stack buying imbalance. So this is bullish here. This one is bearish to neutral. Stack buying imbalance followed by another stack buying imbalance with a bullish ratio here. You have a bullish ratio here, but I always love these bullish ratios when you get them after a stacked imbalance, going in the direction. So here you have a stack buying imbalance and a bullish ratio. That's usually a very strong signal. And then watch, point of control of this bar. Okay, now again, I've been saying, if you expect the market to rally, watch the point of control. So you have point of control, point of control, point of control, all higher. And what are you doing? You're holding as your support. If this is going to be your high, your swing high, this point of control should hold as resistance. It doesn't. It comes right here. It comes up, tests that high. And honestly, this, when I was looking at this high earlier, I thought, maybe we can sell off because we had a high, less volume the second time, a stacked imbalance. Maybe we can sell off, I thought. But this bar here, this bar gave it away that we're not going to sell off. So, it's perfectly legitimate to take this short right here, but you got to manage your trade. People always, one of the questions, I've been working on this thing about trading psychology, but, people always say, well, if I understood the psychology or, the psychological side of trading, I'll be much more proficient at trading. But it's not just the psychology. It's not like you could pick up a book on psychology and you're going to become a great trader. No, you still have to have a method of trading that works, that gives you an edge over other people in the market. I mean, if you don't have that, you can't trade, period. But rather, what the psychology of trading does is put you in the right mental state. right? To make those decisions, you know, to not be like, okay, well, you know, I've got this double high here, double top here, less volume, stack selling a bounce, I gotta get short. Then you're gonna sit here and stay with the trade as it starts going against you. No, you know, if you understood yourself as a trader and, you know, have the right mindset, I find mindset is the better term than understanding trading psychology. As a trader, you have to have the right mindset to know that the reason for being in the trade is now over, and there's bullish reasons to be here, rather than still, you know, being short as you're sitting up here thinking, oh, you know, I'm waiting for it to come back and sell off. No, you had your chance, right? And it's been invalidated by the order flow as it's developing. That's why you use order flows, to read what the market is telling you, or not say read what the market is telling you, but read what the market is presenting to you. You know, the market is telling you, hey, you know, we had a bearish sign here, but it's come right back with some very bullish signs in the market. And what happens? Boom, you start rallying. Again, as I said earlier, support and resistance can often be found in the next bar based on the previous bar's point of control. So here's the point of control. It rallied, went up, tested that high. So now your point of control is down here. Okay, you have your point of control here in this green bar, right? If this is going to be support, it should hold. What does it do? It trades there, it gets 1 point through. Okay, now watch. Point of control in this bar. Okay, are we going up or down? Next bar, point of control is up here. Where does this bar trade? Right down to that point of control. Trades down there again here. Here you just got 3 point of controls all lined up together. And then boom, you make the further move up. But, you know, the whole reason for being in this trade initially was right here. Okay, so you make that high up here, and then you just start going sideways again. You're getting some point of controls lined up again before the market shoots up again. Now, you know, that's simple. Now the other one I want to talk about is I'll say that's simple, but the other, I mean, to me that was a clear one. The other one I want to talk about was Bunds. What day? Where am I on? I'm mixed up on my days here. This one here. This is the Bunds this morning, about 6 in the morning. Again, it might be a little bit hard to see there on the size, but I really want to talk about is just the point of controls here. Just make it a little bit bigger. And the volume, and reading the order flow. Okay, so, you know, people always say, oh, you know, why should I buy the Orderflows Trader as opposed to another order flow software? Like I said, NinjaTrader is supposed to be launching some form of volume footprint chart this year. The end of this month, I don't know, but it's on their website. It's sort of buried in their announcements. But again, you know, if you don't know what to look for, if you don't understand how to read order flow, then, you know, you might as well, what's the point? You're just going to burn money. Like I said, you know, a lot of times people think that, oh, yeah, I'm going to get a volume footprint chart and it's going to make trading easier. No, you also need how to know how to use it. Okay, you could have a scalpel, right? But if you're not trained on how to use a scalpel to operate, you know, I could use a scalpel, cut myself, as opposed to a doctor cut me open with the scalpel. I'm sure his cut's going to be a lot neater than the cut I give myself. You know, because I'm not trained on how to use a scalpel, whereas a doctor, I like to believe, is more trained than I am. But anyway, what I want to talk about is this low here at 630, and you have, look at this volume here, ratio bounds low, point of control is right on the bottom, very bullish sign. You know, if you know nothing about order flow, you know, if you take away one golden nugget from this video today, watch those green bars with point of controls on the bottom. You know, those are very bullish. If you have a red bar with point of control on the top, it's also bearish. Let me see if there's one here. You know, there's one yesterday. Here, there's a bearish one. These you know, this is the Baltos SNR levels here, support and resistance. Now, again, I'm going to sort of segue into it. Now, it's what the SNR levels do is it reads the bars, reads the order flow to determine if there's support or resistance in an area. So you can see here we're rallying up, and boom, the SNR levels is giving you a zone. Now you can adjust how far out you want this zone. You know, I've got it set at 5. I like 5. You know, for me, I don't like so many things cluttering up my chart. I like to be able to look at it. But if you were to extend it out, you know, this is where it gets a little bit more telling. I'll set it to 15 here, just to make it a little bit easier because I will show you visually what I want to show you. Give it a second here. Okay, boom. So it's telling me, in this area, there's resistance. So don't be surprised to see it come right back up to that area and then sell off, because you're coming up to an area where there's resistance in the market. Okay, so how do you do that? What do you do, right? And as a trader, well, what you do is you sit up here. Okay, I know I got this zone up here where this market should be running into resistance, and if we come back up here, we should sell off. So what you do in this area, the reason why it draws out this area is because that's where you place your limit orders, right? In this case, sell limit orders for the pullback up in here. Now, you could be aggressive and just trade it, and at this point, it's just right before the close. It's 1:48 p.m. Chicago time. Market closes like at 4, but cash closes in the bonds at 2 p.m. is the old cash close. So when I talk about the market's about to close, it's the 2 p.m. cash close. But anyway, you have this area up in here, right, where you should be running into resistance. I mean, we can retest it. I mean, as a resistance level, expect it to be retested, and you do. So you have orders just sitting in here, right? This is about talking about taking trades with tight stops. Is you have your limit orders to sell up in here, between 151.01, 151.02, 151.03. So you're not filled at 03. Yeah, your stop's just right up here at 04. So imagine you're selling 02s. You stop at 04. 01s with your stop at 04. Then what happens? You sell it. Imagine you sell here 151, even down here 151 even. Okay, the previous high 151 even. Stops at 04. Risking 3 ticks there. What does it do? 151 even all the way down. This is now you're into the evening session here, because this is actually on the reopen after the session closed here. Then we reopened and traded higher. Hit that level. Hit that support and resistance level. 151. Boom. Right down to 150.16. That's a half a full point there in the bonds. That's 16 ticks. Then you come down here around midnight. You got a support level. Okay, it doesn't test it immediately. It comes down in here later and tests it. Look at this level. Test it. This is at around midnight. Okay, around midnight, you come back down in here. You put your buy orders in here. This is 150.14, 150.13, 150.12. Where's your stop? It's just right here, like 150.11, or I think it's 10 or 11. Boom, it comes back down into that zone. You get filled. What does it do? It rallies back up, almost up to 151 even. But it rallies from, 150.13, 150.14, all the way up to 150.28. Then here, you got to sell. This one fails. Okay, honestly, it just fails. You have your sells in here. It pulls back, stops you out. Period. I mean, I'm not going to argue that it didn't stop you out. That's a trade that worked. That's just a trade that didn't work. But okay, but you just had a trade that worked. A nice 15, 16 ticks. Another, hopefully at least 8 ticks, maybe 10 ticks here. I mean, maybe you could have caught something up on this move. There's 2 different ways to trade it. There's the aggressive way, which is you just get long right after you get the signal, and the second way, with the tighter stop, is you wait for that pullback. And okay, so the other thing that I want to talk about is when you're dealing with support and resistance, failed resistance becomes support, okay, or failed support becomes resistance. So here you've got resistance that fails. Does this become support? I mean, it sort of trades in there and then makes a new high. Now it comes back down, right? This was supposed to be your support level, right? Comes down, blows back through. Now this is the way I like to look at these. So what I do is I don't sit here and try to buy it again. Rather, what I do is I wait for the market to come down through it and then trade back up towards it. Now I'm looking for it as a resistance again, and when it comes back in there again, that's not something I advocate for a lot of traders. Because that's sort of my own way of trading. Failed support becomes resistance. Resistance becomes support once they fail. But again, it's something for you to think about. It's more of an advanced concept of support and resistance. But again, I don't like using this as a level. you know, and here, you know, it doesn't work, here it doesn't work, or so this is your support level now. You know, here's a support level that broke down, and then use it as resistance a bit later. Again, you know, for some people you can, but for most, I really wouldn't consider it, because really what I'd be looking at as you're coming down here, I see price rejection in the ratio. Then you come back up in here. So I know, you know, I had this resistance area potentially earlier, and as we come back up in here, I see you know, price rejection before the market sells off, going down, 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 down. Now, the last one I'll talk about is the Bunds with the support and resistance levels. This is yesterday. I mean, it doesn't really get any more picture perfect than this, honestly. I mean, look at this. So this is the open, then it rallies up. You got to sell, sells off, buy, rallies, sells off. This buy didn't work out, this first one, but then boom, you got a nice little rally up here. The sell, yeah, it comes off a little bit, it comes back up here again. This is an area, you know, around you know, 150, 90, you know, call it 90, you know, this whole area. Look at all these buys in here, or sorry, these sells. So you know, you're sort of coming up into this area of resistance. You know, these buys here, they're a little bit more spread out, but still, I mean, I would expect it to come back down. And at this point here, I would be looking for this market to come back down around the 84 area and probably rally back up into the 90s, and it does. Then it sells off down here. But I mean, look, so say you get short off this trade here, you know, 92 or whatever this is, down in this area. Boom, it trades down into the 70s, and you get a buy, and it trades back up into the 90s. You know, you could almost, I mean, look at this. Okay, there. And I don't know, this one's sort of an outlier, you know, because you got two lower here. I mean, even if you call it here, you know, this is your range. You know, you look at that, you're just trading back and forth, back and forth, back and forth. Even here, where do you rally back up from this buy? Where do you rally? You rally back up into this area where you have the sells. Boom, boom, boom. And then you sell off again to where? Down here. I mean, if you know, were to extend these out, again, you know, I'm not a big fan of extending them out too long. I mean, you can, it's up to you. It's set at 10. If I set it to longer, I don't want to set it too long, but I'll call it 50. I just want to show you. This is a minute-based chart. So from 4. I'll just set it out a little bit longer here, because I really just want to highlight to you, you know, how, you know, trading around the levels. Again, personally, I think you can look at them visually. You don't need to just necessarily draw them out so far on your chart. But look at these levels here. Okay, even if you were to draw this level out all the way out to here, you know, that level's holding. Now here you got a level here. Where's the trade? Right down to here. Here, again, I wasn't able to draw it out, but if you were to extend it out, you can do it visually. Where's the trade back up to? Here. You know, even here, this one, where do you trade back down to? Here. You know, then where do you trade? You trade back into this level here, this level here. So you can see, you know, hopefully you should be able to see the importance of trading with support and resistance levels. I said, you know, today in the Bunds was really a, I'll say, picture perfect day, textbook day, but it was a nice day. But honestly, you know, that's what it looks like. You can even go back to the previous days. This is the day before. Look at this. Okay, boom, you got the support level. You trade back down in here, and then you shoot up again. Here you got the resistance level. It did poke through. It held. Even here you got the support level. You know, draw this out. You know, it comes out to here, to here. That's where you trade back into 70, all the way back up to 90. You know, Bunds are a terrific market to trade. You know, here you got to sell. Here you got a nice buy. You know, you're buying it from, what is that, 160.55. What does it do? It trades, you know, trades up to 70, almost comes off again down to 60 before trading back up to 80. You know, that's 30 ticks. You know, here you got this buy. It pulls back here, right into that area. Look at this. Whoops. I mean, you can pull these down. This is just to give you the visual here, right? This is your support area, right? Again, what do? You pull back in here. We call this what, 70, 71, 72, all the way up to 90. above 90, 95. That's another 20 ticks right there. I mean, that's, I don't know, you know, it's, again, I sound like I'm preaching to the choir, but, you know, you just get these trades like that all day long, you know, every day in the markets, you know, whether it's Bunds, whether it's bonds, whether it's euro currency, you know, everything. So, you know, I don't want to keep this video going on too long. It's already 25 minutes, but to learn more about order flow, you can subscribe to this YouTube channel, or visit my website, orderflows.com. I'm going to try and get more, I'm going to try and write more, you know, I mean, writing is sort of a forgotten art. I've gotten more into posting videos than actually writing down commentary, but, you know, I mean, there's people that, you know, like to see it in writing rather than watch a video for 25 minutes. So, you know, thanks everyone, and have a great day. Bye-bye.